Welcome, everybody, to the Prepare for College podcast this morning, where we help families navigate the tricky world of paying for college without drowning in massive debt. Now, I'm your host, Chuck Moore, and with me today is Gary Carpenter and Al Hoffman. Now, today we're going to answer a question a lot of business owners may have. And that question is, can I use an IRS Section 105 medical reimbursement plan to help pay for college expenses? So today we're talking about how small business owners can use Section 105 medical reimbursement plans to save thousands in taxes by turning family medical costs into legitimate business deductions. So let's start out here. And Al, could you give us a brief overview of what a medical reimbursement plan is?
Certainly. So this is a niche of people that are in business, but gosh, it's one that you won't want to ignore if you qualify. So most small business owners are aware that healthcare costs can consume a significant portion of their family's income. What many do not realize is that the tax code offers a powerful tool to shift those expenses from the personal side of the ledger to the business side. Yeehaw. Okay. That tool is called the Section 105 Medical Reimbursement Plan. It's a mouthful, but it's legit, which allows a business to reimburse employees for health care expenses on a tax-free basis. When structured properly, this plan can transform your family's medical cost into deductible business expenses, resulting in substantial annual savings that can be used to help pay for college and, in some cases, increase your eligibility for financial aid with those dreaded formulas if that's in the profile. In simple terms, the Section 105 plan lets a small business reimburse an employee for out-of-pocket medical expenses and health insurance premium. Make those reimbursements tax-free for the employee and tax-deductible for the business. All right. If I haven't confused you, let's see if Gary can make it a little clearer. So, Gary, you're the CPA. Tell me.
Thank you, Al. Let me start out with it. First of all, this is not available to everyone, okay? If you've got a sole proprietorship, if you've got a partnership, if you have an LLC, it may be available to you. If you have an S corporation, it's not going to be available to you. And I'll explain that a little bit later. But typical arrangement, you have the business owner, he hires his spouse as a legitimate employee. The spouse has documentation items such as she's going to be bookkeeping, she's going to do client relationships, administrative, but she has a real job. And once the spouse is on the payroll, the business establishes a Section 105. Now, that designates the employee, the spouse, is also eligible for medical reimbursements under this program if it's in a sole proprietorship, a partnership, and certain LLCs. Now, what does that mean? Well, that means that the employee has their dependents covered, which are not only the dependents they have, but also the business owners. So members of the family are covered. And they're going to cover expenses such as qualified health insurance, dental and vision costs, co-pays, prescriptions, other out-of-pocket medical expenses. Now, these reimbursements are entirely tax-free to the spouse. Business deduction, it's a business deduction under health care of the business. In other words, when you go to reimburse these items, you got an account on your books, health care costs. You would charge it directly to that. And it's tax deductible by the business and non-taxable to the employee. Now, you can see real quickly that just look at health insurance premiums. It's a qualified medical expense. you could use the Section 105 to pay those premiums. That there could be a substantial savings to the family and to the business. Now, one thing just like to remind everyone is documentation is very important. You need to have the Section 105 properly drawn up and documented. And the spouse has to be a real employee. I mean, it's not just something, well, I give her a check every month or you give him a check every month. They have to have a job. As I said before, it could be bookkeeping, it could be uh, client communications, administration. I had one situation where the family was actually having their son, who was employed by the company under Section 105, doing spreadsheets, doing computer work as far as integrating the system. They actually had a job that they were getting paid for. Chuck, anything you'd like to add?
Now, Gary, could you go over some of the rules that small business owners needs to follow in order to set up and utilize the medical reimbursement plan? Also, I think you discussed what type of business structures these individual small business owners will have to establish. So could you just go over a few points on what they need to do and whether or not they need a professional to set up this Section 105 medical reimbursement plan? What do you suggest along those lines?
Certainly, Chuck. I think, first of all, I do suggest you see a tax professional who has knowledge in the Section 105, and they can guide you as far as setting up the proper documentation and how it has to be presented to the employee or employees. And again, as I mentioned before, bona fide job, a real employee. You have to substantiate these costs. You just don't write checks off. You got to have receipts. You got to have invoices for medical services. You have to have insurance statements, things to that effect. When you write that check, you're going to have attached to the stub the expenses that's reimbursed. Because if you're ever audited, that's the first thing they're going to look at is, okay, where's the supporting documentation for that? So this is very important. And some organizations have it just as when you issue a payroll check, they also issue a reimbursement under Section 105. I prefer to just give me a straight bill and we'll write a check from the business, but that's an option up to you. Now, Section 105, as I said before, it's available to sole proprietors, to partnerships, and to certain LLCs. And let me just take a second and explain that last one, certain LLCs. If you have an LLC and you file a tax return, you're going to qualify for Section 105. But if you elect the LLC to be treated as Subchapter S, you can't have a Section 105. And as I said in the beginning here, Subchapter S are not qualified for a Section 105. Now, why aren't they?
Darn, Gary, that would be me.
Now they say, okay, why isn't the Subchapter S qualifying for Section 105? Well, there's a rule called attribution rules by the Internal Revenue Service. And what that means is even if the owner is 100% owns 100% of the stock, it's attributed to the spouse because the spouse is considered a shareholder in that. They don't own any stock. They don't even work, but they're considered, if the owner died, the spouse is going to inherit the money, therefore it's attribution. They have 100% or whatever the value of the stock the student or the individual has. Now, okay, they get the stock. Well, how does that impact it? Well, there's a certain rule on the Section 105. If you own more than 2% of the outstanding shares, then you do not qualify for Section 105. So again, rules of attribution, the business owner passes away, the wife inherits it, she's all of a sudden 100% ownership, she doesn't qualify for it. Before he dies, they even look at that and they say, this falls under the attribution rules. Therefore, no, the husband hasn't died, but indirectly the wife owns 100% of the business also. So again, that's what disqualifies a subchapter S and an LLC in certain situations where they elect to be taxed as a subchapter S. Chuck, I'm going to pass it back to you. I know you've got some questions.
That's good information there, Gary. And I think the whole thing that boils down here is the share arrangements. And of course, if you're a sole proprietor, according to the IRS, you actually don't have any shares to distribute out like what you do under an S corp. The partnership, once again, you have an election of whether or not to be taxed as an S corporation or as a partnership. And that's the same way also with the LLC. It's like having a business pay your family's medical bills with pre-tax dollars, but it must be set up with proper documentation. That's very important. Also, the plan must cover legitimate employees. In other words, if you do hire your spouse on it and you hire someone else to go into your business, not only can you have to reimburse the individual spouse, but you also have to include all employees within the business structure. Some of the things that you can deduct on that would be like doctor visits, dental care, prescription drugs, insurance premiums, and almost anything that qualifies under the IRS medical rules. Now, some businesses gets the deduction and the family gets tax-free reimbursement. So it's a great tool that can benefit tax savings that can now be used to pay for the cost of a college education or even supplement your retirement or pay down any type of personal debt. So it's a great type of, I don't want to call it a loophole, but then again, it is a loophole that is available for sole proprietors, partnerships, and LLCs in certain situations. So that's about all we have today. I want to turn it maybe back over to Gary and let him say something before we close everything out.
Thanks, Chuck. I just want to reemphasize this is a specialized area. You're going to need to seek professional assistance in this. So don't try to go off and do this on yourself because I can tell you you won't be successful. So again, I cannot overemphasize seek someone who specializes in a Section 105. Chuck, back to you.
Well, those of you listening to our podcast would like to receive an ebook on this subject matter. We just can give you the opportunity to send us an email. My personal email, you can send it to me so we can send you a free copy of the book, is tuition, the number 2, at bellsouth, that's all one word, .net. Send us an email and I'll make sure that you get a PDF copy of the book that outlines some of the things that we went over today. Now, Al and Gary, thanks for your valuable information. So that wraps up everything today on the discussions on how to use medical reimbursement plans to help pay for college or supplement your retirement income. Thanks for tuning in today. If you found this helpful, don't forget to visit our website at prepareforcollege.com. Now that's prepare, the number 4, college.com. Also check out our YouTube channel at youtube.com/@ prepare for college. Additionally, please share this episodes with other parents and visit our website for more information on how to pay for college. Now, until next week, keep planning smart for college cost, and I hope everyone has a great day. Bye-bye.